Hello everyone, my name is John Drennan. I'm the sales manager at Fairway Independent Mortgage Corporation here in Las Vegas. I am here to tell you what you need to know because other lenders are not. More reports show that home prices are setting records while continuing unemployment claims hit a 7-month high. Plus, what you need to know about some key recession indicators. Here are last week's headlines. Home prices continue to hit new highs. Continuing jobless claims increase for the 7th straight week. What important recession indicators are saying. Home prices continue to hit record highs. CoreLogic's home price index showed that home prices rose 0.3% from August to September, hitting new all-time highs for the 5th consecutive month. CoreLogic forecasts that home prices will rise 0.1% in October and 2.6% in the year going forward, though their forecasts tend to be conservative. In fact, CoreLogic's index is on pace for 8% appreciation in 2023 based upon the monthly readings so far this year. Black Knight also reported that national home values rose 0.4% in September, with their index also showing new all-time highs in home values for the 5th month in a row. Home prices are now about 3% above the 2022 peak in Black Knight's index, which is on pace for 7% appreciation this year based on monthly gains we've seen to date. So what's the bottom line? The latest rise in home prices reported by CoreLogic and Black Knight echo the strong growth seen by other entities such as Case-Shiller, Zillow, and the Federal Housing Finance Agency. These reports continue to demonstrate why home ownership remains a good opportunity for building worth through real estate. Continuing jobless claims increased for the 7th straight week. Initial jobless claims declined by 3,000 in the latest week, with 217,000 people filing for unemployment for the first time. The real story remains in continuing claims, which increased by 22,000, showing that 1.834 million people are still receiving benefits after filing their initial claim. The last time continuing claims were this high was back in April. What's the bottom line? Initial jobless claims remain relatively low on a historical basis, suggesting that employers are trying to hold on to their employees. However, continuing claims have risen for 7 straight weeks, up by 176,000 in this time frame, suggesting that it's becoming harder for people to find employment once they're let go. This sentiment was echoed by ZipRecruiter last week during the third quarter earnings call. Co-founder and CEO Ian Siegel explained that the Fed's rapid pace of rate hikes has increased borrowing costs for businesses, leading to much more cautious approach to hiring. He added that there are lower job openings and less hiring, and as a result, job seekers are taking longer to find work. He added that there are lower job openings and less hiring, and as a result, job seekers are taking longer to find work, and those currently employed are changing jobs less frequently. In fact, he noted that the quit rate has returned to pre-pandemic levels. What important recession indicators are saying? The latest jobs report from the Bureau of Labor Statistics showed that the unemployment rate was 3.9% in October compared to 3.4% in April. The level of increase has been a reliable indicator of a recession historically. From 1970 onwards, when the unemployment rate has risen by 0.5% or more from the expansion low, a recession was already happening or is going to occur in 2 months. Another recession indicator called the Sahm rule, named after former Fed economist Claudia Sahm, flashes when the 3-month moving average of unemployment rate rises by 0.5% or more relatively to its low in the previous 12 months. If the unemployment rate in November rises to 4.2%, this indicator would trigger. A third market recession indicator occurs when the number of people unemployed for 15 weeks or longer, as measured by the Bureau of Labor Statistics jobs report, rises by 19% or more over a year-to-year basis. We just crossed that threshold on November 3rd. What's the bottom line? While a recession is not a great thing for the economy, one positive aspect is the periods of recession are always coupled with lower interest rates. Now you're in the know. So what did we learn today? Home prices are up. Unemployment is up. A recession is likely based upon historical data. So what do you need to do? You need to call me today. John Drennan, Sales Manager, Fairway Independent Mortgage Corporation. Now you're in the know.